Welcome to Business Reporter's Future of Insurance campaign, hosted by the Telegraph online. Look at your bookkeeping and you will see that your assets have changed tremendously during the last 10 years. They are more intangible, there are IT systems, there's data. But have we changed our insurance and risk management methods accordingly? Well, there is somebody who believes that we really should update, and his name is John Ludlow from Ermic. Good morning, John.
Good morning.
13th of May 2017 was a very exciting day. That was the day of the WannaCry attack. That was a massive cyber attack around the world. Hundreds of thousands of companies were affected. How has this crisis and the follow-up conversations highlighted our approach to risk and how these risks have changed?
Well, I think it's more fundamental than just the risks, actually. It's really brought home how our assets have changed from the physical assets and the commercial assets that we've been used to managing and protecting over many years to the impact on intangible assets. And the intangible assets today actually make up the bulk of the valuation of our businesses. So we need to understand how to manage them better. We need to understand how to protect them better than perhaps we have been doing in the past. And that's become very clear, I think, to us all. So examples of some of these intangible assets are the IT systems that we have and the data that's stored on them, the intellectual property that we have that other people might choose to try and steal, and also the reputation that our businesses have and just how important that's become. We live in a very dynamic, connected, fast-moving world today, and we have relationships that span the globe. And reputations become incredibly important as a thing to manage.
So basically what you are saying is that the balance tipped towards these intangible assets. Absolutely. Like data and IT systems. Yes. And so on. And I'm pretty sure that all businesses, if they are running at least a mediocre bookkeeping, then they exactly know the value of them. But has our insurance policy adjusted to this change? So are insurance agencies, underwriters offering an updated solution for fulfilling our needs?
The short answer is yes, it's all there, but not enough people are buying it. And I think the reason they're not buying it is because they haven't actually got the wherewithal to talk to the insurers in a coherent enough manner about those assets. So do they know all the systems that they've got operating in their business? Do they know the data that's sitting on those systems? Can they categorize it? Do they know what the high value data is? Do they know how their systems are talking to other systems, not just inside their business, but across their network? So with their their partners and the people they do business with, their suppliers and customers. All of this makes that data very vulnerable and our systems very vulnerable. But it goes further than that as well. It's also, are they looking to understand what intellectual property they own that others would want? Can they measure that? Can they value it? And do they know the value of their relationships of a brand, a corporate brand across the world in different markets with different stakeholder groups? Do they understand how that all works? Are they managing it? Ultimately, if you don't manage your assets, these new intangible assets, it's very difficult to get them insured. If you can't, in a coherent way, describe the value of them, how you manage them, what are the vulnerabilities, what are the likely scenarios of loss and what that might cost, it's very difficult to then have a proper conversation with an insurer. The policies are there, the products are there to help alleviate the risks to the businesses.
Where is this conversation failing, really? You are saying that they, which I assume would be the boardroom or the C-level executives, they don't exactly know how their system is built up, they don't exactly know the value of it, therefore they cannot have a conversation. But is the conversation starting and then failing with the insurers, or the conversation doesn't even start with them?
I think the conversation needs to go down a sort of paper chain of people, actually, which is what makes it so difficult. The board need to have the conversation with their senior executives, who need to have a conversation with their risk managers and insurance buyers. They're having a conversation with the brokers, and then on to the insurers. And somehow we need to bring everybody together and bring the insurers and the senior executives and the boards together to work out how to manage the assets better, how to put together products that are going to be useful to the business, but actually work for everybody. At the end of the day, the insurers need to take responsible risk too. They're pooling risk. So you can't just hand over insurance policies willy-nilly to companies that don't understand and can't evaluate their risks. So you need to be working together better to make this happen.
You're promoting collaboration here, which is obviously one big change in the way we are managing risks and managing insurance. What are the other big areas, if there are any, where we have to change our mindset and change our thinking?
Well, I think businesses also need to change their mindset about insurance. In a lot of businesses, it's a bit of a grudge purchase, and also I think it's seen as a bit of a panacea for the problems, solving the problems, whereas actually insurance can be an enabler if it's done right, if people do collaborate. It enables you to take risks that otherwise you would be uncomfortable as a business taking. And it helps protect your stakeholders too. If your business activities actually damage relationships, it can help put those right as well. So insurance shouldn't be seen as a grudge purchase. It shouldn't be seen as a commodity. It shouldn't be seen as something you can just buy. It should be seen as an enabler and a relationship. And we need to bring everybody together to see how it would work with some of these intangible assets.
How is it exactly an enabler? What we definitely know that we have to spend money on it. Mm-hmm. And what we definitely know that sometimes where something very unpleasant happens mm-hmm. and we are covered against that, then it was a good investment. Yeah. But until that point, we just see the expense. How can we see enablement during these months and years?
Yeah. Well, if you're looking to go into a new market, or you're looking to launch a new product, or you're looking to take some other sort of risk. But when taking that risk for reward, you can see some risks that are outside your tolerance that you don't want to take. You can try and move those risks to other people through contract transfer, or you can seek to insure them.
So let's say you won me over. Mm-hmm. You won me over. I pick up the phone, I give you a call, I ask you to please come immediately, let's talk about this. I really want to have a new policy mm-hmm. and probably a new method across my whole organization, how we are going to manage risk. Yeah. How do you help? What does ERMIC bring to the table?
Well, ERMIC's actually just a neutral space. It's a safe space for people to come and collaborate and talk. We have insurers, we have brokers, we have risk service providers who are very happy to come in and talk to our members who are risk managers and insurance buyers. And really I want to bring everybody together around industry issues and problems and challenges and opportunities so that we can actually come up with new ways of working and a closer and integrated solutions so that everybody makes it happen together for everybody's joint success.
What we are discussing here today is an issue which is triggered by changes around us, how we are looking at assets, how we are changing our thinking. So if we fast forward 5 or 10 years, where do you see our risks and our risk management and insurance against them?
Well, I think the whole thing is going to become more integrated. It's got to, because as you say, things are happening far more quickly. And there's no point in sort of building the Maginot line. There's no point in building something that's not dynamic, that can't adapt. The only way to do that is have greater understanding between all the parties so that they can start to pool intelligence, pool best practice, they can work together, they can become agile.
Obviously, there are lots of things to remember there. Probably you could help us to identify the 3 key takeaway points from which we can deduct everything else. What would these 3 key takeaway points be?
Well, I think the first one is going to be about looking at those intangible assets and asking how well are we managing them and what role has risk management and insurance got to play in that. The second point I would put out would be looking at risk management in a more positive and proactive light. So business is about embracing risk rather than just trying to mitigate it. So it's going to enable your strategy, and insurance is a big part of that. And then lastly, I think it's about working better together. How do we get the boardroom and the insurers with the risk managers and the brokers and the insurance buyers all working together to come up with solutions for businesses as they go into tomorrow?
John Ludlow from Ermic, thank you very much.
Thank you very much.